Hey everyone, and welcome back. One of the coaches at UNGER Academy here, and as we do every weekend, we're going to be talking about the recent market trends. However, before we get started, I invite you to please, as always, subscribe to our channel, go and click on the notification bell, and leave us a like to this video as well. Thank you so much. All right, so it was a busy week in the markets due to the many macro data released in just the last 5 days that have impacted, of course, the market, especially the stock indexes, which initially reacted very well, and I'm referring in particular to Wednesday and Thursday, and then reversed today with the release of the non-farm payrolls data. Regardless of today's downswing, however, this is data that showed that the economy is in good health, and that's why we're seeing significant returns this week in the stock indexes, especially the US ones. We take a look at the NASDAQ, it's up almost 3.5%. The mini SP 500 is up 1.7%. The European stock exchanges are a little bit close behind. The DAX gains 1.4% and the Euro Stoxx 0.81%. Also, we can see that the long-term volatility of stock indexes is definitely low. We see percentile values that are even below the 10th percentile, while short-term volatility is a little bit higher, especially for the NASDAQ. And that's because we see that historical volatility has increased a little bit with the recent market firing and is now near the highs of the last month. On the other hand, we see nothing significant in the bond market. 5-day returns are all very close to zero, but the market's holding well. We have positive 0.4% for the Bund, which has moved the most of any bond futures this week. So with that, let's move on to the energy market. In particular, here we have a negative 16.18% for natural gas, which continues to fall in a really astonishing way. If we also look at the longer-term trend, we see that this asset class, after it peaked in the midst of the energy crisis, that's only gone down over the last 6 months or so. A downswing is also seen for RBOB gasoline, negative 6%, negative 8% for heating oil, and negative 3.68% for crude oil. The metal sector, also a sector that has exclusively negative returns this week. The biggest loser, silver, negative 3.11%. And it's followed by gold, copper, and then platinum. On the meat front, there is little to report. We've got some negative returns for lean hogs, while live cattle and feeder cattle are bucking the trend. Turning instead to the soft commodities market, we have a positive 14% increase in orange juice, which has managed to break all of its recent all-time highs, gaining 14% in the course of a single week. In some of the other commodities, the soft commodities, for example, not much to report. Negative 2.9% for cocoa. Little else. As for the grains, we got soybean meal at positive 4.98%, which is just hit a high, and not much else. Let's move on to the currencies, and particularly cryptocurrencies now. We have strength on the US dollar again this week, especially against the British pound, which loses negative 2%, and also against the Australian dollar. We can take a look there, negative 1.81%. The euro dollar is at the moment 1.0880. Cryptocurrency, we see yet another positive week. Not particularly remarkable, but Bitcoin has managed to hold the levels that it reached last week. And this is still a good signal because we know that it managed to re-enter the previous trading range and break the strong resistance that kept it below $18,500. So all in all, I'd say Bitcoin's performing pretty well. It certainly is in the upper part of this trading range, although it isn't going to be easy to break it because there is an important resistance level here. And next week we'll see whether it will continue the bullish momentum it seems to have gained in recent weeks. Let's move on and take a look at the implied volatility term structure as measured by volatility indexes on the SPX. We see that the term structure is in contango. It's in full contango, so there is an absolute lack of concern among traders about the future performance of the equity markets. I'd just like to point out that the VIX at 18.49 is one of the lowest values seen in recent years. Okay. So we have to go back to the beginning of 2022 to find lower values than the current ones. So the implied volatility has fallen sharply in recent weeks, and that's a sign that traders have no reason to doubt the future performance of equity indexes. Let's now turn over to the rollover schedule for the coming week. We start on February 8th with the rollover on cocoa futures and VIX, and we end on February 10th with coffee and cotton. All right, guys, so before I leave you, I just want to give you some advice. If you're interested in systematic trading, please go and check out the link in the description of this video. And through this link, you can watch a free presentation by Andrea Unger, who will introduce you to his trading method. It's called the UNGER method, which has enabled him to win the World Cup Trading Championships in real money trading 4 times. And through that same link, you can also get the bestseller, the UNGER method, by covering only the shipping costs, or even sign up for a free strategy consultation with one of our tutors. Really good. All right. And that's it for today, guys. Please go and subscribe to our channel, click on the notification bell, and leave a like on this video if you enjoyed it, of course, which we hope you have. Have a great weekend, and we'll see you next week. Bye-bye for now.